It's how we came into the
How
room,
it came in,
you
yeah.
know.
Oh,
So
good
once you walk
morning.
into the room, and we're live already. We're talking about coming into the chat room. Here, see, I think if I do this, I can flip it
Oh,
around.
wow.
Yeah, so
It
you just
feels
drag and
better.
drop. Look at
Yeah.
that. We're doing visual effects here to start off our Thursday morning at 10 a.m., you guys. Right?
Very
It's kind of like
commercial.
a live back and forth.
Hmm.
So, Stacy, good morning. Thursday,
Good
10
morning.
a.m.
Yeah, I love it. It's my favorite part of the week.
Hashtag real estate now. You guys want to use that hashtag right there? Feel free. Hashtag real estate now. Real estate now. Do it. Hashtag it all over the place. Share it, like it, follow. Um, give us comments whether you like it or not. We're good.
You sound like my
But
kids.
what?
You sound like my kids on their YouTube videos. Follow us.
Follow us. Like, share, follow. Yeah, it's all well. I mean, we want to get the message out, and trust me, we've got great messages throughout the whole almost 2 years that we've been doing this. 2 years. That's a lot of years. It's two. But anyway, we've got a great show today. We are going to drop a mortgage nugget. We're going to come up with some real creative ways of finding that down payment. So if y'all, real estate agents out there, buyers out there, if you don't have that money sitting in your bank, stay tuned because today's show is going to totally kick butt, and we're going to talk about creative ways to find that down payment so you can go buy a house. Before we do that,
Let's go to interest rates.
let's do that. I'm going to screen share really quick because
All right.
sharing is caring. Says mortgage rates show little change. So it's a flat week. It's a flat week. Touchdown,
It's
Keith.
flat, but something happened this morning. What happened this morning, Keith?
That happened this morning. Thank you, MBS Highway and Barry Habib and all of his team to give us really up-to-date information about what's happening in the market. So yesterday afternoon, at the conclusion of the Fed's meeting, Mr. Powell came out and took the mic and said, hey, all the economic indicators that we should start tapering the Federal Reserve's purchases of bonds are there. So we're going to figure this out here over the next month or so on when we're going to stop buying bonds and all that good stuff. And that includes mortgage-backed securities, other corporate debt bonds, and move forward with letting the market take itself back over and letting the free market buy mortgage-backed securities and other bonds. So what that did was it signaled to the buyers and the sellers of mortgage-backed securities that maybe the yields that are currently being offered are not high enough for the private sector to buy up all the mortgage-backed securities. So, yeah, the yields went down because we're a little fearful. What that does means interest rates are going to go up. They're going to go up, and I can say this. I felt like that little rock giant in the Never-Ending Story, like, oh, I'm just sitting around waiting for it to come and take me
I
over.
know.
Rates are actually going to go up, you guys. I think
Right now,
no,
this week. Doesn't mean
this week, like
forever, but
today,
yeah, like 5 minutes.
today.
Yeah.
So you got to keep in mind the mortgage rate environment is it's always open. The financial markets are always fluctuating up or down, up or down, up or down based on whatever economic pressures are present in the market. And given the fact that the Fed came out and said, "Hey, all the signs are there. The economy is rebounding. The unemployment is low. We're hitting our benchmarks. We, the Federal Reserve, need to quit artificially stimulating the economy, so we don't have a huge inflation number. So we don't have stagnation. So it's a good thing that the Fed is going to taper this, right?"
Right.
It's a good thing because that says, hey, the Fed believes in the economy, the rebound, what's happening. You can't go anywhere without finding a employment or help now sign.
Right.
It is rampant out there. So get back to work. Let's make it happen, and let's make this little rate change that's going to happen irrelevant. Because guess what? Rates, in my opinion, my forecast by the end of the year, his rates. This is my forecast.
Okay.
23rd of September. We'll be back to 3.5.
Ooh, okay.
We'll be back to 3.5 by the end of the year. That's my take on it. We need to
Right.
have that rate environment for the secondary mortgage market to be purchased up and buy the mortgage-backed securities. That's me talking. It could be lower, it could be higher, right? Long story short, still awesome time to buy a house. Still awesome time to refinance, pull cash out. And this is the big thing that you're going to start seeing some marketing messages from my team. Guys, if you have a HELOC, you need to look specifically at refinancing right now. Here's why. HELOCs are adjustable rate mortgages, and they will go up as prime goes up immediately. So if Powell and the Federal Reserve say, hey, Wall Street Journal prime, it's going to go up next week, that means your October payment will now be a 0.25% higher. And they fast forward another quarter and it goes up another 0.25%, your payment will then be another quarter higher immediately within 1 month of the change. So if you got a HELOC, an adjustable rate mortgage, you should definitely reach out and see about refinancing that out and paying it off. So that's that. Rates are going up. I
I don't know if we're like. I'm happy. I'm happy that you're so excited about it. We'll see.
I am
Everybody's a
excited
little
about it
different.
because here's the other thing. Here's the other thing, and this is for all you buyers out there. Rates going up for you buyers that have been struggling over the last two years to find a house and have been going fisticuffs with 5 to 10 to 15 other offers. This will actually dwindle down some of the buyer capacity, right? So in that case, it will actually turn this hyper intense sellers market that we've been in the middle of for the last 2 years, it will even the playing field. I am in no way, shape, or form, I want to be really clear on this, no way, shape, or form saying this is going to be a buyer's market going forward into 2022. It's just going to, instead of being up against 10 offers, you're going to be up against 1 or 2, right? Or maybe you could actually ask for a seller concession towards your closing costs. That would be special.
That'd
So
be special.
anyway,
Maybe in the next 12 months we'll have a show about that.
yeah, maybe we'll have a show about that.
We keep saying we're gonna have a short sale show, and it's never the time.
Yeah, we keep punting that one because guess
Maybe
what?
it's a decade. I don't know. It's not happening.
They're not coming. So
Right.
awesome. So
All right, well,
let's
let's
switch
jump
gears.
into down payments.
So Stacy, where do the majority of people have their down payment right now?
I actually just did a video about this on millennials, where everyone thinks that they are having a hard time buying homes because of student loans.
Hashtag no.
The actual reason is that there's just so much misinformation out there that they still believe they need 20% to put down. So they're not buying because they don't have what they think is a 20% down payment requirement.
I wish I had my sound effects. The wah wah wah. I mean that.
There's so many options. So I think this is great to show people.
Do not need 20%, my friends. I thought I had a banner that said that I could throw up here, but I don't see it.
I was just kind of surprised that people still thought that with all the access to information, especially with that demographic, that they have so much access, but it's still out there as misinformation. So,
and the information that you do have when you put down 20% is the mortgage insurance haters. The mortgage insurance haters out there are real, and they hate on people that don't have a 20% down payment, and they literally like make fun of you and they browbeat you and say, oh, you don't want to waste your money on mortgage insurance because mortgage insurance is so expensive. We've done a couple shows both here at Real Estate Now and on Mortgage in a Treehouse. Mortgage insurance is your friend, right? So don't let that all take you over. But so let's talk about creative ways. A lot of people, when they have their down payment, which can be as little as 0% on
that's little.
That's little, 0%. So you're only coming in with closing costs on VA and USDA. And when we'll start off with my favorite. My favorite is the good old down payment assistance programs. So up here is the Washington State Housing and Finance Commission. A lot of your states, you guys, we're based here in Washington. I'm licensed in Washington, Oregon, Montana, Idaho, and California. They all have some sort of down payment assistance programs. You just got to go out there and look for them. And these down payment assistance programs allow you to leverage, specifically Washington, allow you to leverage to 100% loan to value, right?
Yep.
That's awesome. You don't need a down payment. You have to come in with your closing costs, but you don't need a down payment. Let that sink in for a second. You don't need a down payment to buy a house. Mind blown. So, for all of you that still have that perception, for all of you that still think, as Stacy shared with what Stacy shared the information with you, a lot of people still have this misperception that you need a 20% down payment. You don't. Washington State Housing and Finance Commission, for you Washingtonians, is where it's at. Idaho has a very similar commission. So that's option number one. If you need a down payment and you want to use the Washington State Housing and Finance Commission, that's a great way to do it.
And
Two
we're
things
talking
really
right
quick.
now about primary. This is for your primary home.
Owner occupied residence. Yes. We want all of you fine folks that are renting to get out of the rental rat race and into a house.
Yeah. The zero
That's
net
what
option is not for investors.
it's not for investors. Investors, you should be bringing some capital to the market. Absolutely. And that's a whole nother show that we should probably bring it back, Jennifer Beatles or one of our other
Yeah.
top-notch resources about properly leveraging those assets. But getting back to it. So if you have a down payment, typically that down payment is coming from a checking account. Oh, hey, we saved up some money. We saved up this. We saved up that. There's a lot of other ways that we're going to talk about getting creative about getting a down payment. My favorite one is a lot of people don't know that they can sell stuff.
Hmm.
Do you know what kind of stuff they can sell, Stacy?
I mean, Legos? I don't know. What can I sell? I'm thinking what I
Ooh.
have in my house that I just have lots of.
Not quite Legos, but something that has a title. Think of that. Number one, if it's got a title, like a
A
Trans
boat.
Am,
Oh, a Trans Am.
like a
Love them.
Trans Am or a car. It doesn't have to be a Trans Am,
Please
but
don't.
this
If
is
you have a Trans Am, don't sell it for a house. That is such a classic. But yes. Yeah.
what? Wait a second. This looks like a classic because it's not on blocks. But if you got a Trans Am on blocks, you could sell it, transfer the title, and prove the bill of sale, and you can use that as your down payment, right? So,
Yeah.
and everybody in this whole pandemic thing, they went out and bought one of these beauties, right? They bought an RV and they're cruising all around the world, and now they're done with the nomadic lifestyle. So they want to buy a house. You could turn around and sell that trailer or that RV or that boat or whatever recreational vehicle. If it's got a title that you can transfer and you
Hmm.
can show a bill of sale, you can use that money for your down payment. A lot of folks don't know that.
Yeah. So let's be clear though, you do need a title on it. You can't just start selling stuff at a garage sale.
Sorta.
Okay. So
Sorta.
explain.
I'm gonna blur that line right now. So
Okay.
we just literally closed a client who, their situation, they were going through a divorce, they had their house, but they sold their farm equipment that was not titled. So tractors, like fencing gates and all the equipment that comes with the
Yeah.
tractor, as long as we can show A, that you have proof of ownership, right? So we ask for pictures of all the equipment. And then B, we could go out to the market and establish a fair market value for that equipment, right? So they had a lot of attachments to their tractor that they sold, and this generated like $30,000 towards their down payment,
Wow.
right?
Yeah.
So as long as we know that you have it and we know that you sold it and we could substantiate a fair market value. So what did we do? Went to Craigslist, we went to Facebook Marketplace and said, "Hey, this tractor, how much would this tractor sell on the open market today if I put it out there?" Oh, it'd sell for $14,000. Great. Okay. Bill of sale is in line with that, give or take 10%. Off we went. So title's easy.
Okay.
If it's not titled, we got some work to do, but we have ways that we can go through it. Now,
Okay.
To your Lego
Yeah.
question, no.
Okay.
I
You
don't
spend
think
a lot of
Legos are
money
going to work.
building them and putting them together and selling them pre-built online.
Fair enough. But if somebody's got the Lego illustration and want to go through the mortgage process, I will take a shot with that. I will help you. I can not guarantee that we can get you a mortgage based on selling Legos as your down payment, but we'll give it a shot.
Yeah.
I'll work with underwriting for you, but
Yeah.
I would probably err on the side of caution that you have less than a 5% chance of getting that one done.
Yeah, no, you're
Um,
keeping it really clear with the title, or if not, exactly what you explained with the farm equipment. So yeah, that's
exactly.
great to know.
Yeah. So you can work through stuff. The other thing that you can do is you can rely on grandma and grandpa. American Gothic, there it is. But family members, they can give you the down payment. A lot of folks, a lot of folks don't know that mom and dad or grandma and grandpa, a direct relative, can give you the down payment,
Yeah.
right?
Just keep it
So
direct. Everyone wants to know a lot of, at least what I've seen, I'm sure you've seen it too. People say, well, this Keith is like my brother, but he's not. But, I go to his house every Sunday for dinner with his wife and kids. What say you? Can we do it?
no, no, we
No?
can't. My favorite is, well, he's my fraternity brother or my sorority sister. Can that work? No, they have to be a relative,
What
right?
about we are engaged?
Oh, fiancés? Fiance, you're fianced is what we call it in our family. Oh, you're fianced. How cool. Yes, fiancés are fine. Fiancés are an acceptable source of down pay or gift funds. Again, we're talking owner occupied, folks. So
Okay.
where you're going to go live. This does not apply. This conversation today does not apply to with gift funds. It doesn't apply to investment properties. You can sell stuff for investment properties, but you can't get gift funds on investment properties. So
If grandma and
think
grandpa give you money for Christmas when you
totally.
were 18 years old and you put it under your mattress and it's cash.
Oh, cash money. Cash money is not a good friend. It's not a
Okay.
good friend to the down payment. So it's sourced, but it's unseasoned. So the money we like to see in the financial institution for at least 60 days, or that it came from a relative's bank account, that it's been in that bank account and it came to your account. So mattress money, as we call it, is never acceptable. You got to get that money in the bank account, and it's got to be in that bank account for at least 60 days. Another one that people don't think of when they think about gifts, a gift of equity. You want to take a stab at that one, Stacy?
As a 20-year veteran in the business, or as a someone pretending to watch from behind scenes?
Someone as a consumer, they don't know that this
I
is
wouldn't know. I would
available.
have no. I don't think the general public would have any idea what that
The
is.
general public doesn't know that gift of equity. So here's what happens: there's a lot of transitional wealth going on. And we see a lot of transactions come over, and they don't realize that if mom and dad are ready to sell the house and they want to sell it to their kids, they can gift the equity position in that house. Say they've got a $200,000 mortgage and a $500,000 value house, right? They can gift that $300,000 of equity to their children, and the children's new mortgage is just paying off the underlying mortgage on the residence, right? So they
Yeah.
only have to get $200,000 mortgage plus the closing costs. So gift of equity, again, it's got to be familial and relative. You can't just say, "Oh, Stacy, you got a big equity position. You're going to sell it to me, and you're going to give me a gift of equity." That wouldn't work. It's got to be relatives. So
Yeah.
gift of equity is a huge thing, especially in the aging baby boomers
Hmm.
that they want to out. And here's how another way that you can work gift of equity. Like, okay, again, a $200,000 mortgage, but a $500,000 house. You could say, hey, we're going to gift equity you $200,000, and then the new mortgage is written for $300,000. So what does that do? It pays off the $200,000 loan, and it gives mom and dad $100,000 in their bank account,
Yeah.
and you still have a huge equity position where you're not paying mortgage insurance, right? Because you got a 20% equity position in the house.
Hmm.
So there's lots of great ways to work transitional wealth and houses. So let us know how we can help in that. The earlier we get involved in that one, the better. So often we get involved in those when it's a mess and we're starting all over again. So if there's ever a situation where you got family members that want to transfer houses and pay off one and give it to another family member, let us know early and we can help you and guide you through that process.
Yeah, that's a great one.
Here's my next one. You, who, if anybody's watching, throw this in the chat. Who are these people? Who are these
Truth be
people?
told, Keith asked me that pre-show, and I didn't know who they are, but I'm gonna blame my parents. Yeah, hi
I was
mom.
gonna blame my parents. No
I
way.
didn't.
This
I
movie came
didn't
out
really
at
get.
the end of the '90s.
I don't know. I didn't grow up with TV release, so I mean, we did basic. Like cable was not a thing in my. I don't know. I
Did
don't
you
watch
ever go to the
TV.
movies? Do you watch movies, Stacy?
I don't, and I don't watch TV.
There they are. It's the
The Bob,
Bobs.
Jamie
It's
knows.
the Bobs.
Okay.
Yeah, those are the Bobs from The Office. Here's a little secret that a lot of people don't
The
realize
Bobs are gonna give us.
that the Bobs, whoops, not gift of equity, the Bobs or your employer, more specifically, they could give you money toward your down payment.
What?
What?
I need to
So
call Loan Depot.
you need to call you need to call on you. Yes, you do. And I love working with employers that want to, and employers, all employers out there, think about this right now. In this horribly competitive market that we have for recruiting and retaining clients, putting together a home purchase employee benefit could be a huge game changer if you're helping your client, or not your clients, you're helping your employees buy a house.
Yeah.
Boom, that's a game changer. Nobody's doing that. So if you want to set that up, let me know. We can definitely set up an employee program to help your employees buy a house. So if you're out there and you work with an employer, I can help you ask those questions of your HR department to see if you're eligible. But employee benefit programs can definitely work towards that. Staying on
Yeah.
the same tangent, um,
Okay.
I wouldn't say I miss work. But the other thing you can do is borrow from your 401ks. This is always 100% misunderstood,
Okay.
and
What
people
are
don't
the
know about it.
misunderstandings?
The misunderstandings are, number one, people just don't know that they could take a loan against their 401k. Similar to that whole I need 20% down, they don't know that that vested balance in their 401k, that's accessible money in
Hmm.
the terms of a owner occupied purchase.
Right.
And the coolest part about that is you become the bank.
Hmm.
401k loans, you can pull out a loan against your 401k, talk to your HR department, talk to your 401k administrator about what the terms are. But guess what? You do have to pay that money back, but you're paying yourself back, not
Right.
somebody else.
Yeah.
So that's the huge power of that. Huge overlooked thing. And so often, and this is why I love having my clients do their application first. They come to me, referred to me by real estate agents, or they come from a different outlet, and they're like, "Oh, Keith, I have no money." Well, let's apply. Go ahead, apply. Let me see what we can do. Maybe we'll look at the Washington State Housing and Finance Commission. And lo and behold, when they do their application online, they're like, "Oh yeah, I got $40,000 in my 401k." I'm like, "There's your down payment, my friend," and you're off and running. So,
Yeah.
401k loans are one of my favorite. Um, Last but certainly not least, uh, are churches and other nonprofits.
Hallelujah.
Hallelujah. Amen. I could get my down payment from my church, my parish.
Amazing.
So a lot of people don't realize this, and we've helped a couple clients out that have access through their church to down payment assistance programs. It's
This
a
one
donation.
surprised me. I have just never heard of that. But it's
Yep.
because it's a what?
It's a nonprofit organization that is acceptable per Fannie, Freddie, and FHA guidelines. So nonprofit organizations can give donations to their churchgoers or to their nonprofit base to help
Mhm.
them with housing.
So any
So,
nonprofit. Yeah,
uh, uh,
it's great.
funny thing is, Washington State Housing and Finance Commission, they're a nonprofit. They're an acceptable chartered nonprofit by the state of Washington. Churches also fall under that same category. So, there's lots of ways to get into a house. We
Here's a
covered a handful of
question
them.
that someone might ask: if they were to get a down payment in any of these ways,
Mhm.
will they have a interest rate increase because it's a gifted a gift of down payment? It's not the
Good question. Good question. Um, Maybe that's
okay.
the answer.
Yep.
And all of the gifts from family, or if you sold something that's not a gift, gift of equity, those don't come with a higher interest rate. What does come with the higher interest rate is the Washington State Housing and Finance Commission, right? So the Washington State Housing and Finance Commission, they do have higher interest rates than if you had your own down payment. The reason being is, keep in mind all these other resources between getting a gift from a family or selling something and or doing a 401k loan. You actually have an equity position you're putting in the house,
Mhm.
right? So maybe it's a 5% down payment on a $500,000 house. So you're putting $25,000 invested into that house. In the case of Washington State Housing and Finance Commission, that $25,000 down payment is in the form of a second mortgage, right? So you've got a $475,000 first and a $25,000 second mortgage. You have
Mhm.
zero equity position in the home. Now, before all you naysayers go out there and say, oh, that's how we got in the mortgage meltdown, 100% equity, blah, 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 blah. We did not get in the mortgage meltdown because of leverage. We got in the mortgage meltdown because we put people into housing that actually didn't have jobs. We put people into housing that actually didn't have credit history and couldn't repay the loan regardless of the status. That was the inherent flaw in the mortgage meltdown. Leverage was not that flaw. So that is the only case in the examples that we gave today where you would pay a higher premium as far as
Yeah.
interest rate environment is concerned.
Mhm.
And and when we talk about a premium, everything's relative. When we look at the rent that people are paying in Seattle and the greater Puget Sound area versus a mortgage payment, and putting into place a principal and interest payment where part of that monthly payment that you're making is actually going to reduce the debt load on your house, thus giving you an equity position in an asset. That's a powerful thing. And when you look at the small increase in monthly payment based on if you had a down payment or if you didn't, um, it definitely long term, short term, definitely outweighs continuing to rent. So,
Right.
you know, it's powerful stuff. So, we're getting really close to 30 minutes already. We've talked about some very interesting ways to derive a down payment. If you have any questions, let me know. Throw it in the chat. DM me, Stacy, any one of us, or anybody at Loan Depot here. We'd be more than happy to help you out, because there's lots of ways out of renting a house into buying a house. So, um, and that's all I got. Any other questions out there before we conclude for today's uh, Real Estate Now show?
No,
Stacy?
I just please share it out there with all your friends, family, people buying. It's just I don't know how to get more out there more, right? That you don't need 20% down. And it
Yeah.
makes me sad that there's people out there just not buying homes because of that. So, yes, please
I'm gonna throw
share.
that in the chat right now.
Yeah, please share. You don't need 20% down.
There it goes. There it goes out to the chats. So yeah, it's I don't know if we need to get like one of those airplanes that fly around with the
Hmm.
little banner out the back that says you
Yeah,
don't need 20% to buy a house.
yeah,
But it's definitely a very ingrained thing into our society. You do not need 20% down. You should be jumping into a house so you're not wasting your money on rent. So anyway, next week we got an awesome show. We're going to talk about getting your house ready for the fall and winter months. We're changing seasons. We're going into the wet and wild season, and the environment gets a little harsh during those seasons. So make sure that you guys tune in next week where we have our handyman on to join us on those must-do things to protect your house going into the fall and winter.
yeah.
So enjoy. Let us know if we could help, and we'll go from there. Happy Thursday, and we'll see you next week on Real Estate Now.
We'll see ya. Thanks, Keith.
Thank you, Stacy. Bye.